Hi, hello, good evening friends. Welcome everyone to Precision Price Action Pro Trader series. Today in this special video, we are going to discuss about the special zone marking with a deep dive on a trading chart with a practical scenario. Let's get in. So this is a chart of Nifty, alright. Okay, I will give you a very simple scenario here. There are some amazing scenarios. Wait. Look at this. You have got some amazing scenarios here already. Look at this friends. This is a rally. This is a base. Gap up base. This is a drop. Correct? Everyone agree? Good. That is a rally, gap up base and gap. If required, I will zoom it. Okay. Now look at this scenario properly. If you observe it carefully, you recognize that this is a strong rally. Why? Gap. But if you look at the base, you can't mark this as the distal line, this as the proximal line. Tell me why? Because price has already gone till this point has come down, and hence your distal line in this game is actually here and your proximal line is ideally here. I mean, if at all you want to trade that level, but that is not a level to be traded. It is just an ordinary rally based drop scenario. It is just a zone. It is not a tradable zone. It is not a power pattern. Okay. Now let's move further. Yeah, look at this level. Can you look at this zone, friends? Can you look at this? Rally, two bases and then a drop. Look at that same scenario. Try to merge these two candles. Open of the first, close of the last. It becomes one big ERC base, correct? Everyone agree? Alright. Now let's go further. Alright. The stop loss in this game is not this. Alright. That is wrong. Ideally wrong. Why is that? Because the price has already traveled up. So technically speaking, this is your distal line. If at all you want to trade, and this becomes your proximal line, or also this becomes your proximal line. See, remember, proximal line can always vary, but distal line should never vary. Why? Distal line defines the stop loss because you need to be far away from the point. Second, proximal line can be anywhere. What would happen? Either you get a trade or you may not get a trade. You might not get a filling. That is fine, because you might get another trade tomorrow. But if you make a loss, you are at loss. So risk is the first thing that you are supposed to technically mitigate. Okay, that is the first thing that you need to technically mitigate. Okay, sounds good. Look at this level. This is interesting. How do you mark this one? How are you going to mark this level? This guy. How do you mark it? Take the topmost point, that becomes your distal line, and take the bottom of the next candle, which is your proximal line. Now if you think this risk zone is very high, you can take midpoint and you can define this also as proximal line, no problem, but your distal line should always be far away. Now look at this interesting crazy scenario. Look at this candle. Here there is a rally, gap up rally, base and drop, correct? Of course you don't trade such location, but from a marking perspective, where is your marking? This is not your distal line. No, your distal line is always this is your distal line, and maybe this is your proximal line. Everyone agree? Make sense? Okay, I will pick up some more scenarios for you if you wish to. Look at this scenario. Look at this rally, two bases and then a drop, correct? Now, if I have to merge these two candles, open up the first candle, close of the last candle, and then I join the bottom and top. Absolute beautiful NRC base. Correct? Where is my stop loss if I want to take a trade? This is my distal line, this is my proximal line ideally. Correct? And if price comes, I will take a reaction here. Don't worry that the price went up through a breakout, that is fine. Don't worry about that part. We know how to handle breakout, we know how to handle support resistance scenarios, but technically all you must know is how to mark these crazy zones where the stop loss is not taken out. Always remember, in about 100 trades, generally the best possible winners make about 35 to 40%, and anybody who claims they have more than 50%, don't believe them. They are not at all terminal traders. They don't understand trading. The greatest trader of all times, Jessel Livermore, had 43% win rate and never trade 1:1 RR, and people claim they trade 1:1, claim 50, 60, 70%. No meaning. It has no meaning at all. I myself have proved technically that with just a 30% win rate, which is just pass scenario in your exam, with a 30% pass mark, 30% win rate, with a decent 1:3 RR risk reward, you can make a fortune. And we have a concept called RR enhancement theory. Through that concept, we will expand the risk reward from 1:3 to 1:5. You don't need 50, 60, 70% win rate. You just need a respectable win rate plus coupled with a solid risk reward. Just win rate has no meaning. It is as good as having a very strong bowler and a useless batsman in a cricket team. No, it should be a combination together. Alright, also okay, sounds good. With this, we successfully come to the end of the session on the concept of special zone marking. In the subsequent topics, we will talk about lot more interesting topics. Until then, signing off, Ashok Devanampriya from Traders Gurukul. Thank you.
Are you tired of stock market losses? Tired of hundreds of boring indicators and the frequent drawdowns? Do you want to understand how to trade markets without indicators? How institutions cheating the retail traders, and how to make fair and consistent trading methods? The answer is IT3T Mega Webinar, India's most comprehensive and 100% money back guarantee training program for stock market investing and trading. And what do you learn from this webinar? Techno fundamental investing, WD GAN techniques, precision price action trading, the option trading strategies, algo trading, and also trading psychologies. So it is a package of 200 world-class investing and trading books jam-packed into the 12 days of webinar. And what you can expect from IT3T: genuine training program with examples and assignments, no indicators, real-life examples, proven and reliable methods. And what you shouldn't be expecting is holy grail formulas, zero loss strategies, 90% win rate stories, get quick rich Ponzi schemes. And we also have students across the globe. The three things IT3T always promises is 100% money back guarantee program, 100% brokerage credit, 100% lifetime learning. But that's not it. We have an early bird offer for you at just 35,000 rupees for first 25 students. So how do you enroll the IT3T program? Simple. Just log on to www.i3t3.in or contact our webinar manager